Financial markets face fresh uncertainty as 2020 ends. The US elections have now passed, but vote counts in several states are being challenged in the courts. In addition, the US, the UK and the Eurozone are suffering new virus waves. Thus near-term risks still remain. But once the US election results become clear, we expect financial markets to focus again on the more favourable longer-term outlook for risk assets. First, the pandemic's resurgence is a significant threat in the near term, but the restrictions being imposed to contain the virus are much less severe now than they were in the spring. Second, it looks likely that Washington will become divided between a Democratic White House and a Republican Senate. Paradoxically, this can help risk assets. Corporate tax cuts and deregulation passed by the current Trump administration may be harder to reverse now. A gridlocked Washington is unlikely to approve large-scale fiscal stimulus to support the US economy. Instead, a more limited new round of emergency aid worth $500 billion or more may be passed early next year. But US bond yields will still stay low to the benefit of risk assets. We see 10-year and 30-year Treasury yields rising only modestly to 0.9% and 1.75% respectively over the next 1 year. A Biden administration is also likely to benefit risk assets through pursuing a less aggressive stance on trade. This will weaken the dollar, and we maintain our 1-year forecast for the euro to rise to 125 and the yuan to strengthen to at least 655 against the greenback. Last, we see central banks remaining very dovish. We think the Federal Reserve will not raise its Fed funds interest rate until as late as 2024 or even 2025. Thus, the macroeconomic outlook looks set to continue favouring risk assets despite fresh virus waves. The global recovery will continue as vaccines are developed, political risk may ease now, the dollar is likely to weaken, and dovish central banks will keep interest rates very low. For more information, please read the latest edition of our monthly investment guide, titled A Time to Heal.